We are focusing on Jana Small Finance Bank, which has come out with the quarterly numbers, but something unusually amazing has happened in these numbers. Well, the market has realized that the numbers, there was one small section of the market who always believed that perhaps the boost in the profit quality was coming from a deferred tax liability. We've spoken about this with the management earlier as well, and there was an explanation right here in the studios. And now that's exactly what is happening. The street is realizing that if the profits are getting some help from the deferred tax liability, on the other hand, the net worth is also getting adjusted, and the stock or the company appears cheaper with that. So that is the adjustment which has happened, and after the numbers, you saw the numbers, it's there on your screen. We have Ajay Kanwal now, who's joining us right here in our studio. Ajay, afternoon, and thanks for dropping by in our studios. Great set of numbers, clearly. But I want to ask you that there's a kind of a cost of doing so well. The expectations go up from the market. How much of this performance is sustainable?
Okay, so first, Ajay and Cheryl, thank you for having me over. See, the path is very simplistic, which is we are serving an underserved market. So I do think that growth may not be the biggest challenge.
Okay.
Good growth is the most important piece. Which is why when we began the bank since 18, we have turned towards secured, largely property backed, because property is the most resilient through the cycle asset. So I do feel that at least growth in the asset base is very much possible because we serve an underserved market, and we've got the three P's right. We've got the product right, we've got the process right, we've got the people right. So I don't see a challenge on the asset side. The liability side has been a bit tighter, as you know, in the last 1 year. Our cost of funds have gone up. But at the same time, our NIMs have been also slightly higher than last year because NP has gone down, interest in suspense has gone. Now, you also have read that the RBI has come out with the gating criteria of how we can present a plan and go for universal. And I think that will give us some alleviation on the liability side cost and also liability momentum also.
But when we reach there, how far are we from?
So I think there will be two. So we have to meet one criteria in fullness, which is net NP has to be less than 1% for 2 years. This year, when we have announced the results yesterday, we are at 0.5. So we will sustain around this number. Then next year we'll be fully eligible on all other criteria like 1,000 crores net worth, etc. However, having said that, this 1 year we will prepare everything that needs to be prepared. Because while we will apply next year after we meet the criteria, we still have 11 months and we know that we want to go on that path. So what else we can do in terms of preparation to reach that point. So when we do submit a plan and get approval, we are more than ready.
Sure.
But I think it is a real positive boost to small finance banks with the specific glide path and criteria that the regulator has issued.
So, sure, I'll just come back to that in a minute. But I wanted to take up your operating metrics. There's a very decent improvement in your gross and net NPA. I saw ROEs have come above the 20% mark. Where would you like to keep your gross NPA, ROE and ROA in the next 4 quarters by the time this 0.5% will be achieved?
Yeah. So in my net NPA, 58% is secured asset with the property backing it with a 40% LTV. I put that in my public presentation also.
Okay.
So frankly, now that you are a secured bank, and when I say secured, it is tangible, mortgage, saleable, serviceable property, right? So I do expect that we will reach a point where our losses, credit losses, will incrementally just keep coming down. What we did have in this last year and the preceding year, and of course during COVID, was more of COVID and pass-through of microfinance. So that is not much of an opportunity. Gross NPA, to be very candid, we are in the affordable housing segment where our ticket sizes are about 11.5 lakhs in housing. Our micro lab book is around 7.5 lakhs. So balance sheets are not very strong. There will be people who will have tough businesses, there will be sickness, etc. So there will be delinquencies, there will be some NPA. But because there is property, I think the bank's losses on anything what we call as LGD, loss given default, will not be something which is any significance. So that doesn't worry us as long as we stay true to our course, which is we manage the P and the 3 P's right, I think we'll be fine. So I don't expect a big gross NPA, net NPA jump going forward. And there is no reason, honestly.
And your ROE, ROA?
Okay. ROE, I think ROAs will get better.
Okay.
So I've given a signal closer to 2%. For no other reason, the credit cost will become lower next year. So that is a very straightforward answer.
Comes down.
And so moment then ROAs get better, so profitability will be better. We have given a signal of 30 to 40% growth on profit. That's got nothing to do with DTA. It is just
Core profit growth at 30%.
so my core profit is 514. I've done a 30 to 40% increase next year, and I've already put that in my public presentation. So we should be able to do that. DTA you mentioned, and if you wish, I can talk about it
Sure,
now.
please.
See, what happened is we were always carrying deferred tax asset,
Yes.
roughly 1,000 crores. Now every year I make profit, I don't pay tax. But nobody says that in the next few years we will also make money, we will also not pay tax, and there is a value to it.
Sure.
And it is a very significant value. So even after 155 crores now, there is another 800 crores open. Another 800 crores open. Right? Now, so people can calculate that while there is another 800 crores to be absorbed by 2027, now that the auditors have agreed that at least for 1 year, they will give us the near certainty profit DTA, I think that becomes an easy one for people to impute back and recalculate.
That was important. Remember, we've been touching about it for some time now because,
Correct.
see, we are a reflection of what the market thinks. And one small section of the market was talking about it. And you've also clarified earlier. And now, of course, the proof of the pudding is in your numbers. So I think that's a discovery which is happening right now.
Right, absolutely. And talking about your numbers, if you look at the agri segment, at least the AUM there also has seen an uptick as well going ahead. Let's talk about the MFI segment as well. Where do you see that one headed from here on, given the fact that when you talk about MFI segment, it's actually a cycle that you usually are in, isn't it? So what's the growth outlook on that particular front that you are seeing?
So, our growth 6 years CAGR is roughly about 3%. So we don't grow microfinance much. We have actually done most of our allocation of capital and resources to grow secured. And also when I say secured, it's, we also want to be in the same customer branch, where people were actually coming to us for microfinance and going to other NBFCs and banks for housing loans, some other for gold loans, some other for two-wheeler.
Right.
So it didn't make sense when you're a bank, you really want your customers to go for a few products somewhere else and not come to you. So now we operate a full suite from a savings to a current to a fixed deposit and the whole suite of asset products. So that's one. Second is, listen, my agri growth is also because I do have a large unbanked rural center presence. So RBI norm is 25% for scheduled commercial banks. I'm at 36. What we do in agri is we actually follow the dairy milk chain. So wherever we find that there is a lot of prevalence of farmers who are using milk production as one of their primary sources of income, and milk has more certainty because less weather dependent. So that's what we do. We do a GLG model of microfinance, and touch wood, I must say that the rural book has been performing very well. And it also is an obligation from the bank side, not just us, all banks actually. The small and marginal farmer has to be 10%. So we do meet that obligation. We actually are at roughly about 18 or 19%. But I must say that the customers perform really well.
Great. So Ajay, before we let you go, tell us, leave us with, because this is a time you're just hosting a big analyst meet in the evening. Everybody's talking about it. Talk to us. What is the messaging will you give to the analyst community after this kind of performance on not a near-term basis, but 3 to 4 quarter far out from the strategic point of view, direction?
So, see, first, the message that I'm carrying, and I really want all of us to know, is that I want predictability, I want resilience, and I want a no surprise bank. So that's the start point, which is any investor should look at us and say, that is what he's doing, and the margin of error can't be too much. I don't want to have a very high, even if I do a 18% ROE, but I want to do it steady over the years. No point doing a 24 and then a 15. And that's the kind of book we are trying to build. So that's most important. Second, ultimately it's a customer business, So how do we win the customer mindset? How do we build competitive modes? How are we digital? How's our service? And very important, how are we on governance? I think if you add up all this, then whatever result I'm happy with. To me, it's less about what is the final answer. As long as they deliver on resilience, consistency, persistency, and more transparency, I think we are happy with the results. And like I said, in our business, I don't feel constrained. Like if I don't do 20, I'll do 18, I'll do 22. To me, that is not a big, it's not the way that, to me, the dial is going to really
Sure.
matter. But we'll continue to be more secured.
And consistent in your performance.
We have more products per customer. My service is good. My digital app is at 4.6 rating. It should get better. I think we deliver on the matrix. Output will be, I think, always reasonable, if not very good.
Excellent. Thanks very much for dropping by, and once again, great performance, and looking forward to listening from
Thank
the
you so
analysts
much.
as well, what they think about after the analyst meet.
If you like this video, then like, share and subscribe to ET Now.